Hooty hoo, all my stock market gamblers. Welcome today. It's Friday. We made it to the end of the week, and what a week it was. Oh my goodness gracious. Russia invades Ukraine. The stock market blows up, down, up, down. Oh my goodness gracious. It was quite the exciting week. Anyways, we had a 1,000-point move in the Dow yesterday. We're up about 750 points on the Dow today. Wild. Now, I mean, I love this market. This is where it's just exciting. I mean, every day you get these big swings. Now, basically, we just had a normal correction. Really? That's about all we had, right? Okay, so the S&P down about 15% before the bounce up now. NASDAQ did get down to about 20%. Now, a correction is basically between 10 and 20%. And a correction happens on average about once every year. We were long overdue for a correction, and we finally got one. Now, a bear market, which is 20% or more basically, rough figures, that happens about once every 5 years. Now, we're way overdue for a bear market. I mean, we haven't had one in 12 years. So let's talk about what's going on right today. Today, we're up 750 points, right? And we were already had a 1,000-point reversal yesterday. So what is that? It's like 1,700 points just on the Dow, right? That's a big move in 2 days. Now, do I think the move upward is over? No, I think we might get another day or two, go Monday or Tuesday. But if you miss this big run up, I have nothing to worry about. I think we're still going to retest that low one more time before we head up and make new highs. So if you missed out at getting out at the top, you're going to have another chance. But if you missed out on that 2-day rally, I think you're going to have another chance there also. I think it will pull back down. I look at the S&P. The S&P, I don't think it's going to get above its 200-day moving average. It's coming back up, and another day, probably Monday or Tuesday, it'll bounce up there, and then it'll head back down, and it'll probably even get a little lower. Now, we came down to 4,100, right? 4,100 on the S&P. I think we're going to get below 4,000. I really do. I think we're going to drop below 4,000 on the S&P. Okay, so that's just a little bit lower than the last low, but you'll get another chance to get back in. Okay, and at the high end, I think we're going above 5,000. I do think we're going to hit a new record high. Now, these corrections, when you have a correction on average lasts about 2 months, which was January and February. We hit the high January 4th or something. We came down in January and February. So we're getting towards the end of the correction. I just think we're going to get one more swoop down to be before we get the run up. Okay, so what I want to talk today about is, we got a problem. And I think the problem is inflation still. Now, I know the CPI, they're saying it's 7.5%, but the PPI, that's the producer price index, that's over 10%. 10% inflation on the PPI, and that's kind of a leading indicator, which is going to say the CPI will keep going higher. Now, the consumer price index, okay, so that's at 7.5%. Now, I'm not saying we could have a month that pulls back and maybe it's only drops down to 5%. Everybody goes, oh, that's great, man, inflation's over. No, I think it's still going to bounce back higher. I just think we're not done with inflation yet. And it's interesting, I mean, do you guys remember when, being a millionaire, you had 1 million of these, 1 million of these? I mean, that actually meant something. Now, where I live, have $1 million. That's just a down payment on a nice house. It doesn't mean anything to be a millionaire today. It really doesn't. I mean, they've destroyed, in the last 100 years, the Federal Reserve's been around about 100 years, a little bit longer. They took this dollar and they took away 98% of its purchasing power. Now, that sounds extreme. That sounds ridiculous. That sounds crazy, right? 98% of the purchasing power is gone. It has 2% less. Well, you know what they're going to do with that 2%? They're going to take away 98% of that. They're going to take away another 98%. And this could happen in the next 4 or 5 years. Now, a lot of you going, what are you talking about, Mike? How are we going to lose 98% again of your purchasing power? Look, if you got money just sitting around in the bank, it's losing purchasing power every day. Now, they'll tell you that the inflation rate's 7.5. I'll tell you it's between 15 and 20%. 15 and 20%. And it's going to be heading higher. Yeah, we'll get a little pullback maybe, but it's not done. It's going to head higher. Now, are we going to go to hyperinflation? I don't know. Hyperinflation, that just ends a country. I mean, you can't survive hyperinflation. We may get there. We may not. Now, today they talk about, they talk about destroying the dollar, destroying the currency. This would be a collapse of the currency, a collapse in the financial system. Yeah, the stock market may go to just extreme amounts, but when the dollar goes to zero, it doesn't really matter how high the stock market goes. Look at, all right, let's say you're losing 15% a year. I mean, in 3 years, you've lost almost 50%. 50%, just cut it in half. You're going to lose 50% in the next 3 years. That's a lot of purchasing power to lose. And I do think we're going to lose 98% eventually. You see, what we have right now is, well, we have a big problem. And a lot of people are just getting slaughtered with the inflation. I mean, poor people, they're the ones that get hit. The middle class, well, they become reduced to poor people. Now, we saw when, Russia invaded the Ukraine, the price of oil spiked up over $100 a barrel. $100 a barrel. That's going to push gas up to about $6 or $7 in my area. A lot of people aren't going to like that. But we're not done. No. Oil's going much higher, much more than 100. I think we'll hit 150, maybe even 200 a barrel. You know what that's going to do to the price of gasoline? Can you say $10, $14 a gallon? It's going to be crazy. It's going to be wild times. I'm telling you, inflation is what's just destroying people. People are getting slaughtered. It just hurts people. Okay, now I'm an economist, and when I was in school, we didn't have this thing called modern monetary theory where you can print as many of these as you want. The government, they can print all the money they want. And a lot of people tell you this doesn't hurt anything. I'll tell you it does. Now, a lot of people say, well, why do we have to pay taxes? Can't they just print the money? Can't they just print the taxes that they need? I mean, maybe we should all stop paying taxes and see how that works. But modern monetary theory, or more money today, is, well, it's a new concept, and a lot of the left, they believe in this concept. They believe that they can just print money into oblivion, and that's what they're going to do. That's why I think the stock market is going to have another run up, another leg higher. We're going to get up to, well, I think we're going to get over the 5,000 level on the S&P. I do think we're going to hit a new high because they're going to keep printing money. They're not going to raise interest rates. And this war is kind of really giving them an out, right? Okay, we can't raise interest rates now. Look at the price of oil's too high. We got to keep rates low. We got to print more money and stimulate the economy. Send it out to the people. And they're going to do it. They're going to do it. They're going to try. And they're probably going to be able to run up the stock market one more shot up. Okay, so I do think we're going to get down to the low that we had just 2 days ago, and that's probably where you want to start buying again. Now, anyways, I was buying yesterday, but I'm already taking those positions off. I mean, 1,700 points in the Dow is a big move. I'm taking off. Yes, I do think we might probably have another day or two of upside next week, but I got to take positions off when you get profit. What was I buying? I was buying the SPY. I was buying the QQQ. I was buying calls on these, and these calls just exploded. I mean, double, triple it in 2 days. I mean, incredible profits. I love that. I love this market. I really do, because it's wild. It's, as a gambler, it's great. You just, it's fascinating to me. It really is. But okay, so I think we're going to get back down to that low. And then I think we're going to shoot up to a new record high. You see corrections, after they correct, we get to 10 to 20% correction, they always hit a new record high. Now when you have a stock market crash like a bear market, right? Okay, a bear market's more than 20%. And I think we're going to hit 50%. Now after every bear market though, it starts a new bull run. Okay, but the bear market is going to happen. I think it's going to happen this year. It's going to be fascinating because we just had the correction, right? So will we get the correction and the bull market in the same year? I think we will. Now it's going to be towards the end of 2022 will be the big crash, but the correction, it's here, it happened. Now was that the bottom we just had? Possible. It is possible. It is possible that we just head up to a new record high from here. I don't think so, though. I don't think so. I think we'll come back and retest that low. But this inflation stuff, it's really, really destroying people. I mean, it just is. Food costs are skyrocketing, gas prices skyrocket. We all know this, but what can you do? Well, people laugh at me, but I don't think gold's a dead relic. I don't. Look at when you have real rates of inflation. Now, real rate is you take the inflation rate, which I'm call it at 15%. You can use the government's numbers, 7-8%. You can use those numbers. Now, what do you get on a 10-year bond? What's the interest rate that the government pays you? Well, they pay you about 2%. 2% interest on your bond. Okay, but they're running at a 15% a year inflation rate. What is that? It's really 13% negative real rate of inflation. The real rate of inflation is 13% negative. Okay, so now do you want to keep your money in the bank? Well, who wants to lose money? I mean, who are these people buying a government bond at 2% when you're guaranteed, even by the government's figure, to lose, let's call it 8%. 2% minus 8 is negative 6. You're guaranteed to lose 6% of your purchasing power every year by holding a bond. And you do this for 10 years? Really? This is the government's number. I'm telling you, in 10 years, you're not even going to have 1% of your purchasing power left because inflation's going to run 15 to 20% over those 10 years. Yeah, okay. So that I think that there is a case for gold. I really do. Now gold when Russia invaded Ukraine, it shot up $80 and it dropped $100 and the same day it was up 80 and then it was down 20. Fascinating to me. Now I like gold and I think gold's going to go a lot higher. I think we'll see 2,500 this year, maybe even 3,000. Now a lot of people say, well, Mike, that's not a very big move. Look, I'm going, that's almost a 50% move if we get to 3,000. Actually, it's over 50%. That's a huge move. Okay, now sure, maybe Bitcoin goes to 100,000 this year. That's what a lot of people are calling it for. I don't believe that. I don't believe that Bitcoin's going to make that run. They've been calling for that run for a while. I've been calling for gold to go up for a while. Okay, gold's been like this. Bitcoin's been coming from the 70,000 and it's down to 40,000, 30,000. Maybe Bitcoin's the savior, but I don't think so. I like gold. Anyways, this was just my rant for the day. I hope you're all having a great week. Get out there. Have a great weekend. I'm Tall Mike. We'll talk again soon. Bye-bye now.